A homeowner emailed us a great question. Their refrigerator supply line burst, flooding the house and damaging the flooring throughout. They wanted to know, do I need to go back with the same expensive flooring I had? I have a replacement cost value policy. What does it owe for? Hey, my name is Mendy with My Insurance Claims Expert, and I'm here to answer your questions. So, understand insurance owes you for what you had at the time of loss. So if you had expensive flooring at the time of the loss, even if you go back with something else, that's what they owe you for. Okay. That being said, understand your insurance company doesn't get to tell you what you do with that money. If you want to take that money and go to Vegas and put it on all on the roulette wheel, hey, put it on black. No, just kidding. I don't recommend you gamble away that money. That being said, a couple of caveats. Number one, let's say you have major damage, a hole in the roof. Your insurance company can go back if you do not do those repairs and say, we don't want to insure you any longer. You're too big of a risk. Now, there is somebody else who does have a say in the matter of what you do with that money, and that's if you have a mortgage company. Your mortgage company can tell you what to do with that money. Their name's going to be on the check along with yours. And that's simply because they have a vested interest in your property. They want to make sure that your property is being maintained so that it retains the value that you owe to them. Now, that being said, let's go into a little bit about what is replacement cost value policy, what is an actual cash value policy, and what is depreciation. So understand, let's say you have flooring that's expected to last 100 years, and that flooring costs $100,000. Now, 20 years in, you suffer a loss, the flooring is damaged, and you now file a claim. Now, you got 20 years life of it. That means you got 20% of the lifespan of it. So depreciation would be 20% of the value of the loss. So your insurance company is going to go ahead, regardless if you have an ACV policy or an RCV policy. Initially, they're going to pay you based on 80% of that loss, $80,000. Now, if you have an actual cash value policy, they only owe you the $80,000. Even if you do the repairs, they do not need to pay you the depreciation. If you do have an actual cash value policy, I highly recommend speak to your insurance agent and find out what it would cost to change your policy to replacement cost value policy. Because if you have a replacement cost value policy, what happens is once you do that work, your insurance company then has to pay you back the depreciation. So you would get the $100,000, of course, less any deductibles. So therefore, always get an RCV policy if you can. My name is Mendy with My Insurance Claims Expert. If you have any questions, email them to Emily at pantherpa.com and we'll get your questions up here and answer them. Have a great day.